But I do know that the demand for gold is likely to get out of control, if you like, want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit. Get the hell out of credit. I mean, if you look at the dollar, look at the euro, look at any of these currencies, and all you can see is disaster.
According to data compiled by the Atlantic Council, the share of dollars making up global reserves has dropped by 14% since the turn of the century. As of 2002, dollars accounted for 72% of global reserves. Today, dollars make up about 58% of reserves. There is also a global movement to replace fiat currencies, including the dollar, with gold. Central banks globally added a net 483 tons of gold through the first 6 months of this year, 5% above the record of 460 tons in the first quarter of 2023. Former stockbroker and banker Alasdair Macleod advises people to get out of credit, emphasizing currencies like the dollar and euro are heading for disaster. However, he suggests moving into real assets, particularly gold for value storage, and silver as an additional hedge. Recognizing the current issues, Macleod emphasizes that China is strategically reducing its involvement with the US dollar. According to the World Gold Council, which uses this and other data to track central bank gold reserves, the PBOC bought 224.9 tons of gold more than it sold in 2023, one of the biggest amounts of any major central bank, and equivalent to around 5% of overall global demand for the metal that year. In his assessment, Macleod expresses that inflation will persist, as he predicts a deficit of over 10% next fiscal year, worsening the dollar's purchasing power. With a 130% debt-to-GDP ratio, major foreign holders like China and Japan are selling U.S. debt. Between 2003 and 2011, Japan and China held 44% or more of all foreign-owned U.S. debt. However, this share has declined over time, and as of 2023, they controlled approximately 25% of foreign-owned debt. Consequently, Macleod asserts that gold demand is likely to surge before the average American, European, or Brit realizes the collapse in the purchasing power of their credit. Now, we present the clips of Alasdair Macleod's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, basically, I don't make forecasts. What I was doing was merely saying what the chart is saying, because it's broken out of a very, very bullish consolidation, an upward sloping flag, which found support on the 55-day moving average. It's very, very simple. It's a very bullish chart, and it's just a question of measuring in, the move into the flag and adding it to the move out of the flag, and that gives you $3,000. I mean, this isn't a forecast. This is just what the chart says. And I would conclude, I think the big bullion banks have probably got their books square or got some gold on the books because they understand what's going on. The JP Morgans and all the rest of it. They're members of the Shanghai Futures Exchange. They do have the intelligence, which is almost as good or perhaps better than government intelligence. So, those big boys, I wouldn't worry about them too much. But I think there are a lot of the smaller bullion banks who are probably getting into trouble on this rise. And this is really reflected on COMEX in the shorts. There are obviously positions in London as well. The positions in London are far larger usually than they are on COMEX. But the different nature of it is that COMEX is perhaps more volatile in terms of what's price and the way in which the relationship between the managed money, which is the hedge funds, and the swaps, which is the majority. The majority of swaps are bullion bank trading desks. They whip things up and down quite a lot. London, I suspect, is less volatile, but bigger volumes. But the point is that the short position, the swaps short position, is around about $70 billion. It's roughly $2.5 billion each. Now, that's an average. That's a hell of a position, really. It's a record. And they can't claw it back. Now, sooner or later, one of these, because remember that $2.5 billion is an average. There are going to be some a lot less and some a lot more. whoever it is who's got a lot more, I think has got a problem. And as the price goes higher, and as the hedge funds go in and buy even more contracts, which are created in effect by the swaps, I would not rule out a rescue. Now, I think the rescue would be behind the scenes. We wouldn't be aware of it, but there are bound to be one or two behind the scenes crises, which we will not be privy to. I mean, we're already in recession. I think it's very, very simple. And as that gets worse, because recessions don't just stop, I mean, it is going to get worse with all the banks with their balance sheets over leveraged and all the rest of it. They're not going to provide extra credit. I would say that it's very likely that the deficit situation, budget deficit situation, is just totally out of anyone's control. And that is, and how are they going to finance it? Again, I come back to this problem. They're in a debt trap, 130% debt to GDP. China has decided that it's reducing its involvement with dollars because, and this is for geopolitical strategic reasons, though I would guess that the people in the PBOC who are not idiots can see what's going on. They will be making a similar assessment to the one we're discussing right now, and basically will want to get out of dollars as much as possible, as quickly as possible. That is why they've been buying gold. Now, they haven't stopped buying gold. They've said they've stopped buying gold, but do you trust what they say? Never trust anything a government says or a government department says. So, but I do know that the demand for gold is likely to get out of control, if you like, want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit.
Advocates of investing in gold call it a safe haven, arguing that the commodity can diversify and balance an investor's portfolio and mitigate potential risks down the road. Alasdair Macleod explains that the charts show a bullish breakout from an upward-sloping flag. He notes that the chart suggests a potential move to $3,000, but emphasizes this is just an interpretation. The spot price of gold closed Tuesday at just over $2,514 per troy ounce, the standard for measuring precious metals, equivalent to 31 grams. That would make a gold bar, or brick, weighing 400 troy ounces worth more than $1 million today. This week's record high means that the price of gold has climbed hundreds of dollars per troy ounce over the last year. Tuesday's price is up nearly $620 from this time in 2023. Given the understanding and intelligence, Macleod predicts that major bullion banks like JP Morgan have likely secured their positions in gold, while he believes smaller bullion banks may struggle with rising prices as seen in COMEX short positions. Let's get back to the interview.
Get the hell out of credit. I mean, if you look at the dollar, look at the euro, look at any of these currencies, and all you can see is disaster. I mean, putting to one side the developing World War III, which hopefully will be avoided, which one of the other guests, actually, Gilbert Doctorow, specializes in following very, very closely. And I'd recommend people to tune into his Substack if you really want to discover what's actually going on with the war rather than what we are told in the mainstream media. And I mean, basically, the central banks are all bust. They're all in negative equity. If you account for it properly, for all the bonds they have bought at far higher prices than the current level, with yields far lower than the cost of financing their holdings. We've got commercial banks are trying to reduce their exposure to risk. And that means that zombie companies are going to be threatened. The inflation story isn't over. I mean, just the root of inflation is basically budget deficits. And, with the next president of the United States, and I don't care who it is, that deficit is going to increase. You're looking at a budget deficit, I think, perhaps in the next fiscal year, starting from September, of over 10%. Now, that just feeds into inflation. It feeds into a fall in the purchasing power of the dollar. And other countries are in exactly the same position. In fact, the dollar is probably in the worst position because it's got a debt to GDP, government debt to GDP, of around about 130%. And that is a debt trap, particularly when the two major foreign holders, China and Japan, are net sellers. So do you want to really hang around in credit, which is basically currency? People tell me currency isn't credit. Well, it is. I mean, just look at a central bank's balance sheet. You've got the currency on there as a liability. That is your counterparty. They're all bust. So, yeah, get out of credit. And where do you go to? Where do you go to? You go to real things, perhaps, some real things. But if you want to store a value, then you've got to go into gold. And someone put it for small change into silver. So that's basically where you go.
Stanovo's team at UBS forecasts that the price of gold will reach $2,600 to $2,700 by mid-2025. UBS sees lower U.S. interest rates and the weaker dollar supporting inflows into gold ETFs, consequently boosting investment demand. Could this be the beginning of a broader global shift towards real assets? And how should individuals prepare for such a transformation? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.